Welcome back to my market review series. In this video, I'll be going through the pair US dollar against Japanese yen. Um, this is a pre-market analysis. I have a trade plan for this particular pair, and I'm going to start by analyzing from the higher time frames to the lower time frames, thus explaining the logic behind my trade plan. So in the course of the video, my pace of speech may not be as fast as may be convenient for some of you. So feel free to click the settings button and increase the playback speed to 1.5 or 2x. So on to the analysis. So I always start by um, marking out levels of the previous month as well as levels of the previous week, the immediate previous week. And this is for context. I'd like to know, compared to the previous month, where are we standing at the moment? So this white candle is the previous month's candle, and this is previous month's low, previous month's high, and this dotted line is the mid-range for the previous month. So having marked out those particular levels, we can see that price is currently below previous month's mid-range. So we are trading below the lower half of the previous month's range. Down to the weekly time frame. So I do the same for the weekly, and I use this uh, white horizontal rays. So this is the previous week's high, previous week's low, and previous week's mid-range. So we can see that price is already trading below previous week's mid-range, and we can also see that we're trading below the previous month's mid-range as well. Then after highlighting those levels, I look for my points of interest on the daily time frame. Now, these are levels where I'd be interested in taking a trade, or levels where price action at that particular level would dictate my bias. So, for instance, on this daily time frame, you can see there is this blue zone, this other blue zone, this other blue zone. So this particular blue zone is as a result of this last buy candle before this sustained trend to the downside. So this is an origin zone. This is a zone of perceived premium value by market participants. So at this level is where we have a lot of orders being executed at market, thus leading to an impulse move to the downside. So as we can see, price reached our zone, and this zone is coupled with this gray area, which is a fair value gap, and this is as a result of this particular inefficiency that was left during this impulse move to the downside. So this fair value gap coupled with this daily order block form a high probability trade entry zone for me, and we can see price rose to our levels, ranged for a short while. That means we had a liquidity sweep at the level, and we have a sell-off. So before we go ahead, let me clean up the charts for more clarity. So I've been waiting for the price to reach this particular zone, and it has. So I'm going to explain how I've decided to enter a trade. So on the opposite side, I also marked out this particular zone. So you can see right here is the final sell candle before this aggressive move to the upside, which led to our zone. So if price is going to proceed lower, this is an area where I would start looking for longs or continuation trades to the downside. In between here, I wouldn't be interested in entering the market. I'm a swing trader. I don't scalp, and I don't take lower time frame trades. So I've highlighted my levels, and I've explained um, why those levels are important. And now I'll zoom into the 4 hourly time frame where we have my trade plan. So this is the logic behind it. So I always anticipate to see a sell-off in case I'm looking for shorts in such a scenario, a sell-off coupled with a break of structure, specifically a break of the final low that led to our zone. So after this, okay, so as you know, in a market trend, we have impulse move and pullback. So in an uptrend, the impulse moves are the moves that take the price higher. The pullbacks are the minor retracements of price before the next impulse to the upside. So right here we had an impulse, a brief pullback, then this move led us into our zone of interest. So this particular zone. So I always watch out for breach of these levels after a sell-off. And as you can see right here, the level has been breached. So the market is changing its character from an uptrend to a downtrending market. So this is a zone of reversal, and now I'm looking for a short trigger. So after observing that break, I want to trigger a short at the levels where this particular move originated. And as per my analysis, this particular move, this particular candle is the origin of this move. So let me zoom in a bit. So this right here being the move that broke structure originated from this order block right here. This buy candle, uh, which led to a brief sell-off. Then it was retested, and we had an aggressive sell-off to the downside. So what I'm waiting for to enter the market is for the market to give me a better price for me to enter the short and ride the move up down to this zone right here. So I'll zoom in back to the daily so that I show you another metric of confluence. So after now on this sell-off, this is the daily time frame. There is now on this particular sell-off, we have an inefficiency right here, a price gap. This inefficiency, I'd like to see it filled so that we may continue moving lower. And to add confluence to that, you can see that the inefficiency coincides with the origin of this particular origin that led to the breach of this move. So that adds confluence to my entry zone, which is there. So I'm waiting for price to retest this zone, give me an internal structure trigger, that is the lower time frame price action that fits the metrics of my trigger, and I'll ride this move all the way down to this daily order block, which is a 7-hour trade. So since the market has changed character, remember the ranges we highlighted at the beginning of the video. So we're going to start with the monthly. For us to move lower in the monthly, uh, so let me just a minute. Apparently we have I had erased the monthly mid-range. Let me fix that. So there you have it. Back to the lower time frame. So since market has already changed character for us, we are bearish. I want to see the price still within this particular monthly range. If we're going to proceed lower, I want to see price look for liquidity within this range. I want to see price tap liquidity in this range for to give us momentum to go lower. And the only liquidity we have is at this zone. So within the previous month's range, this is the only liquidity we have, which I expect to be tapped for us to move lower. So I hope everything there made sense. If you have more questions or anything you'd like clarified, you can ask in the comments or join my private Telegram group, which is linked in the description. That's that.